Hi, everybody. My name is Ronald. I'm the co-founder at FrankonFraud, and I'm the webinar host for today. Before we going into all the details, I have a few housekeeping items. The first and most important is please be active, please ask questions, please be engaged. Many of you already found the chat box. That is exactly the place where you can also share your perspective or ask any question. And we're trying to include your question in our discussion or putting them to the end and having a more Q&A at the end of the session. The second part is of the housekeeping items, the webinar is recorded. So anytime you can go back and watching the recording or looking at the slides again. Cool. So today we talk about a topic which we already have seen a lot. We talk about check fraud, but this time is more the real-time aspect. I think everybody talks about real-time fraud payments. Why not with checks? And that's why it's an exciting combo here, where we have three great experts on board. We have Lashona, we have Frank, we have Nicholas. Ladies first, Lashona, please share a few words to the audience who you are and what is your role.
Sure. Hi, I'm Lashona Sharp. I am the Chief Risk Officer at Valid Systems. I've been at Valid about 20 years, but the majority of my industry experience has been around fraud mitigation, business intelligence, and product implementation as it relates to check deposit, check cashing, for the both underserved and underbanked, as well as banked community.
Thank you, Lashona. Thanks for being here today. Frank, your turn.
Yeah, good morning, everybody. I'm delighted to be here today. My name is Frank McKenna. I'm the Chief Fraud Strategist here at a company in San Diego called Point Predictive. And let's see, I've been working in check fraud detection since 1990. I was a fraud analyst and I used to review checks manually. So I know the pain of that. But more recently, I've spent the last probably 4 to 5 years kind of writing about check fraud and what I've seen happen in the ecosystem on social media and at banks. And I've been writing a lot of stories on my newsletter called FrankonFraud. So I'm really excited to be here today because I think what's going to be different about this webinar is we're going to talk a little bit about the problem, but more about some cool new tech that's going to solve that problem. And I think that's what people want to know now is how do we move beyond it? How do we move to the next step? So I'm excited to kind of dive deep into the technology that might help us here.
Thank you, Frank, for being here and also adding this extra background on your check fraud experience. Nicholas, last but not least, please.
Good morning. Nicholas Ledford. I also work for Valid Systems. I'm the SVP of Risk and Analytics, which is our decision science team, which builds the fraud detection models. I've been in fraud for about 20 years now, and the last 10 of those have been with Valid Systems.
Perfect. So we have an awesome panel for an awesome topic. And as we know, check fraud is already around for a while, and the problem is big. But how big it is, that's the first point where Lashona will give us some more perspective about where we are and how big is the problem before going into ideas how to solve it.
Yeah, thank you. So I think we all know that, checks have been around a very long time, and we all hear the edicts that checks are going away. Checks are going away in the United States. Don't worry about it anymore. And what we see with this chart that we're showing here is that is true. That is the case. Checks are declining, and they're steeply declining since we've seen here since 2018. That's the blue line that we're looking at here. The problem is that even though we have a decline in check volume, the fraud around the volume we do have is significantly increasing. From 2018 to 2024, it is more than tripled in the millions and billions. So it's a definite problem that we're all chasing and trying to solve. So if we go to the next slide, Ronald, thank you. Just one thing we wanted to point out here was that This isn't just an issue in our digital channel base. It's an issue across the majority channels, which is teller, mobile, and ATM. Mobile, though, is definitely where we're seeing the majority of the fraud taking place. And that's because it's anonymous, it's digital. You can sit in your couch and fraud to your, heart's content. ATM, of course, you've got a little bit of an increase over your teller or branch channel, simply because at that point, if you can get your check through and you can fraud, you can immediately take funds from that ATM anonymously, standing behind a machine instead of a person frauding. So that's definitely kind of your secondary fraud channel, and then teller continuing to still be a problem. And the majority of reason for that is simply because of human error, right? Someone standing in there, you may have a new bank teller, just may not know all of the rules and regulations and what they should offer and what they should be checking on KYC and things like that. So you're going to continue to have that simply also because the majority of your deposit volume is in the teller branch. We still have roughly 80 to 85% of check volume happening within the branch versus your digital channels. So that's just a quick overview of kind of where fraud is happening. Even though we have decline, it is still an aggressive problem that we're all trying to face.
Frank, I can see your eyes. You're looking at the numbers. You have been around in the space for a while. I'm just wondering if you have any comments. Are you surprised about the numbers? You're also sharing a lot of numbers on your blog. We're just getting a bit more perspective from your side.
Yeah, and I think these charts are eye-opening, aren't they? Because check fraud has always been either the number one or two fraud type for a bank for many, many years. But I think what happened in 2021 is we were coming out of the pandemic. And during that time period, a lot of fraudsters were created that were attacking the PPP, the Paycheck Protection Program, and unemployment benefits here in the United States. And when that dried up, they were looking for something new. And they discovered that they could start stealing these checks from the mail. And that there was a market for these checks if you went onto Telegram, even Facebook, or on social media. And I think that's what drove a check fraud from being a big problem to a huge problem, because then it basically, for most banks that I know, it essentially doubled within a year. And it really hasn't gone down since. It's been pretty flat. Banks have been able to curb it. But I think these charts tell the story of, we thought this checks were going to go away and this wasn't going to be a problem anymore. So there was a lack of investment, right? Because who wants to put big fraud systems in when checks are going to go away? So I think there was a lot of things that fed into the problem, but these charts want to tell the story. This is a big issue for banks.
But that's maybe a good point, Frank, what you mentioned. The checks going down, the numbers go up. But if the checks going away, as we can see in the slide with the blue line, so again, still the question for now our discussion, if checks going lower and lower, is it now the right time to invest more money in tech? Isn't it? Or is it maybe still a bit of a debate?
Oh, if your strategy is to wait for checks to go away, you're going to be waiting a long time. So no, I don't think you can wait for checks to go away as a fraud strategy, at least.
And you already touched a few points, and there was a slide for this where we trying to list what are potential reasons why check fraud is increasing. And you mentioned already the first one, Frank, with mail theft, but there are a few others. I don't know, Shona or Nicolas touching on the other few items.
I think a lot of the investment that banks put in kind of in that 2015 through 2019 time range was around the card chip, right? There was a lot of fraud in debit and credit, and focus was given there to put in chip within the debit and credit card industry space. And so with that, it did help, right? It did make a huge difference in the amount of fraud that could be happening around card-based transactions. The problem then is fraud's not going to go away. Fraud it's a full-time job for these people. And so they're going to look for the new way that they can fraud at the banks and beyond the banks. And so it was an easy target going back to check. And so that is definitely what they've done. They were not able to test as easily fraud in the card space, and so they just returned to check. And that's why another reason we're seeing that huge increase in check fraud over the last 3 years.
I think too, Frank mentioned it earlier, right? That the prevalence of social media and the traction that some of these posts get there, it brings a new audience and, unfortunately new people who are committing fraud that probably wouldn't have before. And Frank, I'm sure you see a lot of that.
Mm-hmm. Yeah, we see a lot of Telegram groups promoting thousands and thousands of checks. You can see these checks online. It's absolutely astounding. I think the other thing, when you were talking about the 2010 to 2015 time period, a lot of banks were not necessarily focused on putting a lot of money into check fraud because they were working. A lot of the projects are around digitization and remote deposit capture, allowing people to deposit checks remotely instead of going to ATMs and in the branch. So that was where the money was going. But then again, when they put the remote deposit capture, the mobile deposit, that opened up a whole new way to commit fraud in checks. So that's another driver, is there's just a whole new channel that was really ripe for fraud.
I think that's the challenge too, is trying to keep up with technology around fraud, right? We're keeping up with technology around advancements about how to make convenience better for customers in the banking segment. But the problem around that we face then is that there's also, because of that automation and those advancements in technology, fraud is continuing to advance right along with it, which allows them to find new revenue streams, new opportunities to fraud. So it's a challenging game of keeping pace with fraud.
Mm-hmm. But before we going on the right side with potential solutions, maybe it's good for the audience to give a bit more perspective. What is the solution right now, which the majority of banks are using, and that also underlies a challenge, especially with all the buzzwords about AI, Gen AI, and all the others, because it will not get easier with the current process with the majority of banks using today. Maybe, I don't know, Lachona or Frank, maybe someone can give a bit more perspective to the audience. What is the typical process for bank to process a check today?
Frank, do you want to take the lead on this?
Oh, about the solution?
No, but more like what is happening today? I mean,
what are the banks doing today? Yeah. So I think banks are doing a lot more than they were, say, about 6 years ago. So there's been a lot of investment that's going in. But I think if you look at the fundamental technologies that were put in for check fraud, they were systems that were put in about 1990, when check fraud was actually pretty high back in the 90s. And these systems were rules-based. They were basic rules, but they worked well. Like, checks are out of sequence. Somebody pulls a checkbook that's not in sequence, or it's a high dollar amount, or there's something about that check that looks off, right? And it's looking at some very, I'd say, basic patterns. These checks then get outsorted to fraud analysts, typically, who have a few hours to look at thousands of checks side by side. Maybe they have a signature card, and maybe they have the check itself. And then they compare the signatures, or they look for anomalies. And they have maybe a minute or 2 minutes to look at a check and make a decision. It's an impossible task. I did it for many years. And as good as I might have been at it, it was still a 50-50 proposition. Oftentimes I wouldn't get it right, just because it's such a complicated thing. So the banks are kind of overwhelmed with lots of checks. They have these fraud indicators. The fraud analysts can't really handle it, and they end up missing a lot of the fraud when it does happen. But they do a good job with what they have. I think those days of that type of system are gone. I think there's much better ways to do it, and there's ways that can work in real time, but also eliminate a lot of that manual analyst review that's so fraught with problems.
I think the other problem that you have with just throwing bodies at a problem like that is the constant training you're having to do to keep those, the the person that you're putting in front of it may not be familiar with fraud at all. And so you're not only training them on their process, but you're training them on how to detect fraud. And that can be, you've either got someone that's, very engaged and likely to enjoy that type of work, or you have someone that is simply just, put in a position to do the best they can, but they may not have a passion with it, right? I mean, I think a lot of us that are here and have been sitting here on this panel even have been here for years simply because we have a passion for fraud and fraud mitigation. So, it's a constant game of trying to stay ahead of it with a body that may not be invested at all. So it's a tough game.
And they might be new. They often are, right? This is the cue that they put the beginners on who maybe just got out of college and
yes,
never written a check, right? And they're responsible for making decisions that could be $100,000, $150,000 decisions in 2 minutes. It's just not the way to do it.
But we agree that the majority of banks today will look at the check with whatever systems they have or with a team manually and trying to see if this check is good or bad based on information which is on the check in comparison to whatever signature card, other checks which they might have in the system, correct? And
that's right. Yeah.
And also we also wrote it down here. In the past, a lot of fraudsters used Photoshop or other more simple tools to manipulate this. And it was already a challenge to identify is this a good or bad one. But if you're now looking at all the upcoming or already in place tools today, it's getting more difficult for a human or for a tool to identify. And I would like to make just this point. So that the picture itself on the check is maybe not the best way validating the check. Now on the right-hand side, we have two potential ways how to look at this from a different angle. Just again, trying to go around the picture topic. And let's talk about the first one, how we could detect check fraud with behavior.
Yeah, I can talk about that. So that's something that, obviously we're very familiar with. So using the data that we get from banks to create this behavioral analytics approach to fraud detection. Just to touch back on, what you were saying, Ronald, about, the advancements in technology. I think, a lot of times these images, these counterfeits are so good that, even though perhaps is scoring low from an image fraud standpoint, behaviorally, you could see some really strong indicators of fraud that, likely need to override, right, that good image. And so, that's where we kind of help out. Think of the behavioral methodology as, from an account holder standpoint, we're going to do things like try to understand, have you deposited a check from that payer before? It could be a paycheck. Is there a day of week that you would, present that check? Is it in the amount that you normally present? How often? That sort of thing can be really good indicators of good behavior. And then from a fraud standpoint, we've seen things like, the fraudsters waiting until right before funds availability cutoff and then presenting a rash of checks so that the institution doesn't have time to review and make that decision to hold. That would be impactful for preventing loss. So that would be an example of, behavior that's indicative of fraud. Those are the kind of things that, we look for both the good and the bad to ultimately, feed into our decisions.
I think I'd like to address too, I know we've had some comments on the side here around some positive pay and things like that. I think one of the things that you have to be considerate of as it relates to positive pay, it's a great solution, but not all, parties are involved in positive pay. The problem is that when you look at positive pay, a lot of it is, business accounts that leverage positive pay for payroll, like ADP and things like that. That is a percentage of the check systems that are out there. Unfortunately, a roughly 50 to 60% of the checks that we're seeing around fraud are in the consumer base. It's me writing a check to Frank or me writing a check to Nick. We're not part of that positive pay solution. And that's where a lot of the fraud is happening, along with your smaller businesses that may not be using a positive pay solution. So, it has curbed, positive pay has allowed some curb on fraud. Unfortunately, the fraudsters have picked up on that, and they're moving more into that consumer and small business banking solutions.
But I have two questions for this, because I don't know the answer. Is looking about the statistics about the increasing fraud, is more in the B2B angle or more in the B2C angle, or like between customer and customer?
Across the board.
Exactly.
They don't care when they steal a check if it's a business check or a consumer check. In fact, they like the business checks often because they're high dollar amounts with high value, but they're not discriminate. They'll go after any check.
Yeah, they'll go after federal checks, federal government checks. There's no place they're stopping to state that.
And is the bank treating a business check different to a consumer check, or they have the same process, same tools, same people running through?
It's usually the same, groups that are handling all checks that they're seeing. So
cool. Perfect. Then let's go to the second point again, consortium. It's a good point in our industry in general that companies, providers want to build consortium data to tackle different type of problems with this approach. And again, also here for checks, that could be one approach which could make a difference.
Yeah, I think if you think about check fraud, what makes it really difficult is if you look at credit card fraud, a bank might get 40 or 50 fields of information on every credit card transaction, but on a check, digitally, they might only get the information off the microline or off of the payee and things like that. And oftentimes banks don't even collect the payee. So you're dealing with limited pieces of information, which makes, if you try to do it alone and try to create rules and try to create a process, doing it on your own, it's almost impossible. Consortium-based approach is the way that you get around that, right? It's because that data can then be pooled into a massive database like Valid Systems has, and you can do a lot more with that data, cross loan patterns. You can take those 8 fields of information and then enrich it with many more fields of information and many more risk signals to actually get very good at stopping a check. That's fraud.
We got a question from Mohammed. Maybe that's a good one for Nicolas to provide some additional perspective.
Yeah, and it's really good because that's exactly what we're doing. So when we say typical check, again, when you look at it from trying to identify good behavior, it's pairing that or dimensionalizing the account holder and then the payer that they're, let's say, depositing that check into, right? And then you would look backward to see, okay, how many times have they, if they have at all, presented that a check from that payer before? How much is it for? Is that normal for them? That's, from an analytics standpoint, is really helpful to determine good from bad. And of course, in a lot of these situations, right, the absence of good activity are going to be the high risk, attributes.
I got some of the I was kind of astounded by this statistic that 4 trillion in checks. Was that some of the information I've heard, like annually, that you can scrutinize across your network? 4 trillion, right? So that shows you the power of data. A bank may look at 100 million, but you got 4 trillion to get those insights. To me, that's super powerful, right? If you can get all of that data off of all the frauds across the network.
Yeah, and across institutions too. So it's not just, you can see those across, someone may have seen a payer at one institution, and do I normally see it at that institution? Am I seeing it across other institutions for different dollar values, right, across different institutions? And the consortium system allows us to look at that and better understand that for each of those, payers presenting items.
Mm-hmm.
Cool. I think that's, again, two good things. And again, the audience, please let us know as well if you see these two approaches could solve the check fraud issue in our industry, or maybe not. So please let us know what you think about this. Let's go to one more topic, which we already touched from a few times. Again, we talk about traditional checks. And again, there are certain ways today which are maybe not that ideal anymore. Again, here we listed 4 items. I don't know, Ashona, maybe you want to take on this and providing a bit more perspective on the problem.
Sure. So a lot of the banks today have absolutely implemented solutions where they have a way to look at history for a good payer around an image perspective, right? So you have images that have been presented that they know to be good. They haven't seen returns on those images, those from those payers. And then what happens is they're presented the check in question, right? The system is helping them understand things to look at, key points to look at from a history of images to the current image, and things that may not look good from a system perspective for that, based on what they're seeing, based on the history of check images presented. And that's kind of what has been the solution, right? And it is giving the fraud analysts a way to look at that, review that, and look at key points. It's helping them observe key points from an image perspective. The thing that it's missing, though, is just that behavioral analytics. You're looking at an image versus an image, right? You're looking to compare what you can see, but what you're not seeing is all of the underlying analytics around, where have I seen this happen before? Have I seen this happen before? Have I ever seen this person present from this payer before? You're not really seeing any of that underlying behavior for both the payer and the person presenting the item. Is it a new account, right, at a bank? So you have very little activity from that, but you may have a lot of activity from that payer to be able to make a better and more informed decision for your analysts versus simply, here's a list of checks and here's another check. Look at the 2 images and make a decision with that. And what if you don't have a lot of history or check image history for a payer? What is your analyst to do at that point? So we've taken a very different approach at Valid, where it's definitely more data-based and not image-based. And what we'd love to be able to understand is there a way to join the 2 together, where you have the best of both worlds, to kind of make those really, really good and informed and quick decisions.
Thank you. I think that was a good summary to, again, get everybody on the same page about what are the challenges and how we could take the next steps to find a better solution. Before we go into solutions, I just want to pick one question from Kelly, which I think is interesting. Of course, we made a statement before that the majority of fraud is happening in the branch of the bank, of course, with the high dollar amounts. So if you're now talking about banks who don't have a physical location, do they have no fraud, or just less fraud, or different type of fraud, or how's this happening here?
I think it's hard to give a definitive answer to that, and I don't have data to back it up. I think that just observationally, what we tend to see is that they go to the branches, whether it's ATM or teller, because usually there's higher dollar limits and thresholds in those channels. And so especially the more sophisticated fraud groups will use that to their advantage and go to those channels. And the less sophisticated, they'll tend to go to the mobile channels. Mm-hmm. So, I do see it as more exposure, but then it's very dependent on, the institution's account origination. Like, are they strict? Are they, trying to open as many accounts as possible and not stopping as much fraud right up front in the account opening standpoint. So there's a lot of dependencies there, but yeah, that's a really good question to ponder.
Yeah, the other thing to, these digital banks or neobanks are considering is kind of their funds availability policies. Are they different than, policies that are instituted at more physical branch location banks and things like that? And are they holding more items from a security perspective to wait to see if they can offer funds versus holding those, items a little longer than maybe a typical bank might? And not to say that they are or aren't, but that's an approach that a lot of banks are taking into account as it relates to fraud.
In many other conversations, we talk about faster payments is faster fraud. And maybe that's a good topic which comes to the next slide. So we talk about solutions, again, looking at this time, how long it takes to get the money in your bank account. And again, customers are used to have real-time, very fast, quick turnaround of everything nowadays. So if a bank provides a better service, maybe that's a good USP in comparison to other banks. And that's why let's jump into the solutions. And again, we have here a few slides prepared to give some more details how a solution could look like.
Yeah, I can start here. So yeah, RTLA is the product that we offer for deposit fraud detection. And RTLA is real-time loss alert. So that's a good place to start, real-time data. So, in this product, we're getting deposit transactions when they happen through an API. And, we're not only responding back immediately with our risk score of that item, but also we're using real-time data to inform that decision. So, if that particular customer or payer, there was transactions, 30 seconds ago, a few minutes ago, all of that gets captured within, the model features that result with that risk score. So all of that velocity is quickly aggregated and fed into the model. And so we can identify things pretty quickly, before they truly go off the rails there. And then, we kind of talked about the behavior-based analytics. So I mentioned I've got 20 years of experience, and everyone on my team actually has at least 15 years of check fraud experience. And so collectively as a group, what we've done is sort of codified all of the things that, we've seen in the past that have been, ways to describe or quantify these behaviors that are either indicative of fraud or indicative of good, check deposit transactions. And so that's essentially what makes up our models. It's really the accumulation of knowledge of our group and team over the years that we're, again, feeding that information into the model for decisions. And then, like I mentioned, so we would deliver a score. And what that does for an institution is it gives them, flexibility to determine, what they're going to do with that transaction. It could be that it's a very low scoring item, but like we talked about before, maybe from an image analysis standpoint, let's say the signature went to the microline and it caused some sort of an exception from that standpoint, but behaviorally it's a really low scoring item. That could potentially be removed from their queue to avoid, them having to look at something that's really low risk. On the opposite side of that, you can even, create auto hold queues where if it's a very high scoring item, and we demonstrate this through performance data to show, okay, this segment of transactions, 80% of the time, those are bad. And so those you can not have to put manual review process under. You can just auto hold those. So the score lets you do a lot of different things. with your current deposit fraud queues.
Do banks use this in the branch as well? Like when somebody presents a check to a teller, can the bank use this as well?
Yeah.
And so if a check is presented, let's say there's a fraudster goes in, has a $30,000 check, presents it to the teller, it hits your API. And are banks using that score and saying if it's over, I don't know your score, but does it go from like 1 to 999?
Mm-hmm.
And so if it's like a 900 score, they'll tell the teller, don't accept that check or hold the check, or how they use it?
I believe the hold still would come after the fact. So I don't believe they're informing at the point of deposit.
Oh, I see. But they won't let them cash it if it's like a super high fraud score.
Yeah, exactly. Yep.
Because I had read, so one of the things I'd seen just yesterday on a new report that came out, about 60% of the check fraud last year for this one vendor was that they'd measured in the branch. So I think the branch are being targeted right now by these mules. And that's always been a big problem, is how do you know what to do with these when they're presented to you? So I think that real-time aspect of letting a teller get some insight is a critical piece.
And like LaShawna mentioned earlier, right, giving the teller the responsibility for deciding it's hard because fraud changes fast, and how do you update the the documentation and training that would need to go into here's when you place a hold and here's when you don't. And that's where this type of information is very helpful. They don't have to do that.
What are some of the unique patterns you think that let's say that, I'll go back to that $50,000 check. What are some of the unique things that you would find on a check that would make it score 900? Like what are some of the signals that you could do with your data and the consortium?
So I would say, it's obviously going to be very situational. And to be honest, it's usually, to get something really high like that, most everything has to be bad, right? So if you're a business account that makes that deposit every time, that's normal for you, that $50,000 check is, even if there were other potential red flags, it's probably still not going to score at the very top. So if, from a fraud standpoint, it's a very hot dollar amount. And again, this kind of goes back to what are the thresholds. And so the fraudsters know this stuff, and they always operate at the max, right? So if the threshold is 20,000, then, most likely they're going to be right under that. So the model is capturing that information from a historical perspective and using this new transaction to go and say, okay, how close does this match to historical fraud events? And then it will score it accordingly. But it's going to look at the account holder. It's going to look at the payer, the check sequence, those sort of things to determine, is this really risky?
Well, that's why I love scores versus rules that can be reverse engineered by fraudsters, because I see on Telegram conversations where they know what a bank's rules are, their thresholds. They can't get a score. They don't know what the score is. They have to have something that they can't reverse engineer. And that's why I love a score approach. It takes away the guesswork for the tellers. It is something that can't be reverse engineered. So it's a good approach.
I think the other thing to keep in mind that's super important when we talk about real time at Valid, it is truly real time. I mean, a lot of our, the features that Nick talked about and the way that our decision scientists leverage their knowledge and their history and their, work that they've done in the fraud space for years definitely feeds into our primary feature set within our machine learning modeling. However, we have had to be very careful about the fact that we have to build features that run real time as things are happening, because at the end of the day, right, when the cutoff is about to happen and you see that influx of activity come in that could be from fraud, you have to be able to react to that and refresh your feature set immediately as it's happening, or you're going to get taken during the day. And so I know there was a question about how we compare to EWS. I I'm not 100% familiar with, all of EWS's capabilities, but I will say that one of the things we've worked very, very hard at is to ensure that we are absolutely up to the second, real time with the activity that's happening that we see through our API. That's been a core component of Valids.
And one thing I see up here, I don't know if this is on this particular product, but I don't think EWS does a guarantee, right? You guys actually have a guarantee. So that's something very unique.
Yeah. Yeah, we absolutely are feel strongly about our modeling, and feel strongly that we have a great and a great product out there that offers a solution, and kind of put our money where our mouth is, if we say, right, we're going to offer that guarantee option for not just our RTLA product, but other products that we have within the market space.
Yeah, what I kind of like about the approach that you just outlined here is you're kind of using three things that have worked really well to attack fraud in credit cards and other industries and in merchant fraud. So real time. If I think back to the 90s when credit card fraud was just booming, it was out of control. The way that the bank solved it was with real time. It was the ability to do real time intervention when a profile of a credit card transaction didn't match to the consumer. So it's a real time kind of behavioral analysis, and it knocked out fraud because you were able to stop the transaction before the funds were released. And then the approach that worked for merchants was the guarantee, right? Where you had a lot of merchants that didn't really know analytics and they didn't know how to build them, but companies emerged to say, we have the model, we're stand behind our model, and we're willing to guarantee it against fraud. So that approach you're using as well. And then finally, the consortium data. That's always worked. That's worked in mortgage. That's worked in credit cards. That's worked in banking. Those three things together are just tried, true, tested techniques. And to me, that's what I like about it, is because you can use things from other industries to solve the problem that's emerged with check fraud over the last 5-6 years.
Yeah, absolutely.
Yeah, one last part to hit on here is just the adaptive nature of our modeling. I wanted to speak to that a little bit. So we've worked really hard to, once we put a model in place, and the way that it would work is we would receive data from an institution, historical data, build all this profiling, all these features that go into the model. But what we do to make sure that model actually lasts and doesn't need to be replaced in 3 months when a fraud trend changes is we build in these features that are essentially like rolling fraud rates that capture new patterns. So, for example, like we talked about, like if a bank were to change, the max limit at ATM, the model sees loss, on a check amount perspective, let's say 15,000. But now they move it to 10,000. So what some of these features will do is they will see, oh, fraud is increasing from, 9,500 to 10,000. And it will notice that fraud rate increasing, and it'll pick up on the signal without needing to be retrained again. It will see that the loss is moved, and it will, score those items accordingly. So a lot of the predictive features that we use, we do dimensionalize them and then do these rolling calculations that, again, just make it so that we're not having to replace the models, every 3 or 6 months. They stand the test of time.
Mm-hmm.
I have one question without being, again, a check expert, but what is the time that a bank is realizing that a check went through and is fraudulent? So you make all the checks, you release the funds. So how long does it take that you realize, again, credit cards, you have often this delay of whatever, 3 months, 6 months, 12 months. But what is the timing that you have with a check?
It's usually 3 or 4 days they would get that return back from the maker bank.
Yeah, it's
and by
rare.
that time, the funds are released and
Yes.
the money's gone. So they claw back, and now they're in a negative balance position because the fraudster took the money.
And some of these check washing cases, though, can take a year, right? Some of these I've heard that people they wrote the check, but they didn't write it for the dollar amount that it was written, or it was transferred to new pay. They don't even notice it on their bank statement. So by that point, the money is super long gone, right? Some of these can be, I've heard of years. Sometimes they finally notice it years later.
Yeah, it's rare, but it does happen. Absolutely. Especially, for individuals that may not, look at their bank statement every day. I mean, we, I grew up where it was required, right? You balance your bank statement. You didn't have a way to do that digitally, right? You got your checkbook out and you kind of went through the process. And now everything is so digital. You get your balance as soon as you log into your account. So it's not, it's not something that people are doing on a monthly basis or a regular cadence, right? They're just looking to see what their balance is and kind of moving on, and until something happens, right? And then they have to go back and try to research why, go to their bank and fight the problem. And it can take, you're right, Frank, it can take months to kind of get a resolution on that.
I mean, we talked about this real-time solution here, but also let's go into reality. And we already have case studies live, isn't it? I mean, that's maybe also good here for the audience to share some numbers, some real-time cases. And we also have a QR code on top where the audience can download a case study to get even more details and more statistics. But let's talk about the good things here. Let's talk about some success cases to give a bit more perspective how all this applies to reality.
Yeah, I can talk about this. So like Frank, I remember I started as a fraud analyst, and I wasn't reviewing checks, but I was reviewing data. And I remember how excited I would get when I found fraud, and I would block the fraud and watch them be blocked and declined after the fact. It just made my day. And, I don't quite live in that world anymore, but this to me is equivalent of that sort of, excitement where, our product goes out to one of our clients, they start using it, and you see a drastic drop in fraud. And so that makes me just as happy. And that's what this is, just you're sort of demonstrating a real world example of someone who, was able to use the RTLA product that we mentioned before, the fraud scoring. And this is check deposit loss at the ATM channel, and saw a very significant drop in the amount of charge off or loss they took year over year. And I was digging into this a little further, and something I thought that was super interesting is that they went from 25% of fraud attempts leading to charge off, and actually in 2024 they were down to 6% of fraud attempts leading to charge off. So much more effective, with the alerts that they're getting from us.
So that's really interesting. So your models are really geared towards charge off. I think I saw a bullet point. So you see this drastic drop of 73% reduction. I'm curious, how did it get implemented? Did they use your score and just say, if it's an ATM deposit and it's got this score, we're going to hold fund? What was the strategy that they used to get this huge decrease? Secondly, how do you gear it to look for charge off? Because you're looking at, that's financial loss. That just makes it more powerful, right?
Yeah, exactly, Frank. So part of the data that we get from institutions is not only the deposits and returns, but we also get the account data, which lets us understand, did that account subsequently close, and what was the exposure, the negative balance on that account. So that allows us from a modeling standpoint to target those. We don't target just any return, because most returns aren't, loss exposure, right? They can claw back and it wasn't intentional and it was a good customer. We don't want to impact those transactions. We want to impact the ones that we do feel like, would lead to loss. And so you had it right. So they just, over a certain score threshold that maintained a false positive rate that they were happy with, they were, I believe, just giving those to a special team of deposit fraud analysts to review. And I don't know if they auto held all of those, or if they did some of their own, layered in some of their own analytics for decisioning. But yeah, I think the result shows that they were definitely using it for sure.
That's very interesting.
And looking at the time, we have roughly 9 minutes left. We have another slide with some more good insights, and also with an opportunity for banks, not just stopping fraud, but also providing a different level of service to the customers. And again, that's also something interesting, which is like a win-win for everybody. So that's why let's talk about this and let's share some more insights. Shona, Nick?
Yeah. So I know this is focused primarily around fraud in our RTLA product, but one of the other things that we're leveraging and have built at Valid is our instant funds product, which poses more of a question for the banks around availability, how quickly they can make funds available. And one of the ways that they're counterfeiting fraud is to look at holding things for an extended period of time, especially in your digital channels, right? And also kind of limiting the dollar amount that they can take within those digital channels so that they can offset some of that fraud. And so one of the things that we looked at was offering a way from a guarantee perspective for our financial institution clients to present those deposits, and as a guarantee, we will model each of those deposits that we see through our API, provide back a instant decision within sub-second of, we would go ahead and make these funds available to your account holder right now, immediately, meaning no hold. And in the event that that item returns, Valid actually will refund the institution, the financial institution, for those funds that were returned, regardless of reason. NSF, fraud, if we say to go ahead and provide immediate availability and that item returns, Valid absolutely will guarantee the financial institution back those funds that were returned. So it's another way that we're offering banks a solution for account holder support, right? People that need those funds immediately. And as we see kind of the economic solution or situation, here in the States, it's a difficulty. And a lot of their account holders are needing those funds as quickly as they can to kind of meet their day-to-day needs. So this is absolutely something that we're seeing a huge success on for that account holder base.
It's very interesting because if I think back last year at all the big check fraud cases that made the news, like the glitches and all the big announcements around check fraud, it was all around banks having a problem with holding of the funds, right? There was something with the rules that went awry, or maybe they put something in, it just completely broke down, and then they got attacked. So I think having something that is around funds availability, that kind of becomes a no-brainer. Like, is this something that a bank can charge extra for those funds availability so they can cover the cost? So basically the bank doesn't really pay, and if there is fraud, they get reimbursed.
Right. It's very much a win for the financial institution. Absolutely. It's both a revenue gain for them, and then they're not worried about that loss, coming in. They can return those.
Yeah, and we did a really interesting data study as well on those customers to see, besides the fee, right, what's the other benefits they might be giving these account holders and therefore the bank. And so in looking at the users of instant funds, we took a cohort of them and we said, all right, let's look at attrition, digital migration, and then the customer's financial health. And we saw just very direct impact on the customers that use this product. They had 62% less attrition if they had used instant funds 5 or more times, or 30% less attrition if they'd used it at all. That's pretty huge. They migrate, more likely to the digital channels. And then I think last but not least, the other big one is their financial health. So of the instant funds users compared to non-users, they had 66% of those users decrease their overdrafts by at least 5%. before, as compared to before their first instant funds usage. So the great thing, about that is, those, especially some of the good customers that tend to overdraft, get out over their skis, right? And they may eventually charge off because, the fees are adding up and they can't repay. So, there's benefit in giving them the liquidity to not overdraft, not be charged those large fees. And you see charge off that's not your typical fraud, right? But we're able to offset some of that as well.
So do most banks pass the cost of this product to the end customer as like a service, like we're willing to give you the funds available, but you're going to pay a whatever price, right? So these people that are using this 5 and 6 times are paying, but they're actually staying with the bank. So they're happy to make the payment versus have overdrafts and things like that where the other makes them go away.
Right. Without this, right, what are their options? Their uphold is going to be placed on their item, right? They're going to have to wait for those funds to be able to pay rent, buy tires for their car, right? Things like that, it's a struggle, right, for them. So from a, nice account holder, experience, that's what you're gaining here with this for sure.
Mm-hmm.
I mean, in the last few slides, we gave a lot of good insights and ideas to the audience. And if you want to learn more, again, this is another good opportunity in the white paper. Take the QR code here, download the white paper, and gives you even more insights and data. I mean, Nicholas just mentioned a number of interesting data points. And if you get the white paper, you're going to find as well a lot of data who maybe it's good to have a discussion with your team to see is this something which could benefit your customers or your operations. I think at the end, there are a couple of touch points which you need to check. Yeah, Frank?
Question. Do you guys do like tests with clients like that want to try it? Do you guys do? How do they get exposure to without like fully committing?
Yeah, we do that quite frequently, right? Usually before any implementation, we would have a model built with their data and be able to, demonstrate the results and even give them back the data scored so they can layer it on top of their own transactions and see what the value would be.
Mm-hmm.
So endless opportunities. And again, I'm just going back to the first slide. If you want to reach out to the team, here again, the names. But again, we sharing the slides, the webinar is recorded. On the website, you're also going to find the names of all the experts here. So please do not hesitate to reach out and learning more. Again, we're getting close to the hour. We want to respect everybody's time today. And I feel we can speak another hour about this topic. But again, it's an old topic, but more excitement around this with some new technology, new approaches, how to solve this, but also adding potentially customer benefits with instant real-time funds. Perfect. And Lashona, thanks for being here today. Nicholas, thank you. Frank, always a big pleasure to have you on board with all your experience. Thank you for the audience being here and your questions. And see you next time.
Thank you.
Thank you.
Bye-bye.